Welcome back, folks, to Sell Any Biz podcast, Just Business Talk. Our today's guest is Scott Weavil. Scott, welcome. You described Sarah Pacific Partner as operating much like a real estate agent. But for businesses, could you give a snapshot of what the process looks like when selling a company versus a property?
Yeah, for sure. I think I mainly use that description for folks, that I meet out and about that have no idea what investment bankers, M&A advisors, brokers do. I think that's the easiest way to sort of draw an analogy. This may be a little bit a little bit below your audience's level, but basically that is what we are. I can't speak to selling properties because that's something that I've never really done. I do imagine there's some pretty big differences because on the one hand, with a property, you got something tangible and physical that an inspector can come look at, and a business is a little bit different. We do have our versions of inspectors that do financial due diligence and things like that, but it's a different thing. But for sure, what we do at Sierra Pacific Partners is we take companies and we help drive them to exits when they're ready to do so. So we're not as much exit planners. We don't really work with companies for 2 or 3 years beforehand. We have some fantastic partners that's what they specialize in. But when you're ready to sell, you come to us and we
Great.
help get you
So we've
towards an
read
exit.
that you're passionate about helping sellers in middle market achieving a meaningful exit. Could you share what makes this market segment unique and why it's personally rewarding for you? Why do you love it so much?
Yeah, it's just a very, very unique marketplace when we're talking about roughly, here in the US, businesses with purchase prices between,
Mhm.
say, 10 and $100 million. I think in the SBA space, you have fantastic brokers that do those sizes of deals. And you also have fantastic valuation data based that SBA lenders
Mhm.
feed into certain databases, right? And then as you get bigger, as you get into the true middle market, which, we'll call above 150, but we'll say the real just true middle market, maybe 500 million in sales price. You can start to use public company trading comps and things like that for valuation. So you start to get great valuation metrics there. We're sort of in a no man's land where there's not a ton of data, I think, in that market, and it's also underserved. That you have a lot. I wouldn't say a lot. I think we still don't have enough quality business brokers in the United States serving those Main Street deals, but that is a relatively mature profession.
Right.
And then as you move up market, you have both
Right.
boutique and bulge bracket investment banks. But sort of in this area, depending on the bank, the bigger banks typically aren't interested below 500 million. Some of the what I would call the more regional or second tier players, maybe 50 or $100 million. But there's a gap there. And I think it's very fun to work with. You still have a lot of businesses, not all, but a lot of businesses
Mhm.
that are founder or family owned. So it's fun to work with those folks because the transitions tend to be so meaningful. But also you're working with businesses of a scale that we have, for lack of a better term, good material to work with, right? Most likely you have a CFO. If I need financial
Mhm.
information, or at least a fractional CFO, if I need financial information, I can get it. If I need, I have sellers that are responsive to the process, and that makes it a little bit more fun for me that I'm not just
Great.
hounding people for
So, can
information
you
all day.
walk through our listeners about Sarah Pacific Partners? So how your structure is and what services do you provide? How do you work?
Yeah, for sure. So we really have two segments. We have sort of an M&A segment and a Main Street segment. I lead our M&A segment because that's my background. So
Mhm.
we typically take on larger deals. And then the Main Street segment takes on, the more the SBA size deals. Generally, we do a little bit of capital raising activity, but not a ton. And I would say that generally, what differentiates us both on Main Street and up market is we do tons of proactive outreach to buyers. That's for sure standard practice up market. And I also think that's what's fun about up market is you can find the buyers, you can look at buyer histories and see who may be a good buyer for your target. But we also really try to do that on Main Street too. I know some of my brokers are definitely big into that. If you're listing, whatever, an auto parts store in an area, they're reaching out to all the auto parts stores in that area, in adjacent areas. They're also reaching out to, I can't come up with it off the top of my head, but folks that are adjacent, if you own a plumbing parts store, maybe an auto parts store would be a good fit for you. So we really try to do that proactive outreach. The deal processes tend to have some divergence based on outreach depending on where you are in the market. So generally, when we work with a client, the first thing that happens, we'll have an intro call. If it's a good fit, we'll send the client an NDA saying we're going to protect their information. And then they send us financials. We run up a valuation. And if the seller and we see eye to eye on that valuation, then typically we move forward. If we don't, there's really no reason for us to work together because we don't think that we're going to be able to sell it at a price that'll make the seller happy, which it tends to be. That tends to be the big sticking point there. And then up market, once we move forward with the seller, the first thing we start doing is developing a buyer list, including with the seller's input. But we'll do all that research, develop a buyer list, and then use tools to figure out who to contact at those various buyers and essentially try to drive interest in the business, get those buyers under NDA, send them a SIM marketing document, and then continue the deal process. If everything works out great there and we get a lot of interest, we try to get LOIs or indications of interest to come in at the same time so we can sort of pick, who we think our best buyer would be. It looks a little bit different on Main Street deals. More of the listing process where we'd put them on the big sites that I think everyone is aware of. And so we rely a little bit more on inbound inquiries on those. But again, we try to do proactive outreach there too. For the Main Street deals, sometimes you have a little bit less luck getting the bids to come in at the same time, but we still, if that's
Right.
something
So
we can do, we
you
definitely try
work
to work for that.
directly with sellers, or you also work with brokers and advisors as well, to source your deals?
Yeah, so at this point we don't do buy side work right now. So we work solely with sellers, and for sure, great point on every deal, we definitely collaborate with the rest of the sellers team, their M&A attorney for sure. If they have a tax advisor, we coordinate with that person as well as, a wealth planner is also often very helpful because we're coming in at a sort of at a discrete point in time, right? Whereas that wealth advisor may have a 10-year relationship with the seller and know specifically what that person is trying to do post closing. And that influences what we do as our job. Now, every day we coach sellers that, um, the buyer is not going to value your business based on the fact that you want to retire to Hawaii, right? That really has no impact on how the buyer views your business. However, it does have an impact on what we do as far as what we're looking for in closing terms. In other words, we may have a seller that, they want to buy that house on Hawaii. And so they'd rather take a certain lower purchase price than a higher purchase price that they may not get, and that won't fund that house on Hawaii on their timeline. So that's sort of how we intersect. But for sure, it's a team effort, and I think the more sellers can loop in everybody, the better. One thing I'll say that we see is a hesitancy to keep CPAs and attorneys fully involved because they charge hourly. So we'll have sellers that try to, give them the smallest sliver of work as possible. And I think generally that's a huge mistake because to the degree that your advisors who are professionals in these areas don't have the full picture, they can't serve you as
Okay.
well as they
So
could
your journey
otherwise.
includes a Wall Street M&A background with big public transactions. So what was some key lesson you took from that experience with that now benefits your low mid-market clients?
Yeah, for sure. I started my career working at a Wall Street law firm as an M&A lawyer. So hence, I like M&A lawyers and I like working with good lawyers. I think what I took from that was just a commitment towards excellence. And I think just
Right.
great customer service. And that's one of the reasons that I like this middle market area. I would rather have 5 clients that I can just really give great white glove efficient service to than 20 listings where, candidly, I'm lucky if I remember my seller's name without looking at my notes. Um, but I do think what I learned, one of the huge takeaways is the fast pace. And it's 100% true
Right.
that time kills deals. And so anything we can do
Hmm.
to move things faster is better. And I mean, that also, as I alluded to earlier, that also leads to us pressuring our clients. Our best clients,
Hmm.
if I'm on a call and I say, hey, the buyer's asked for AR aging report, right? The best clients, somebody on that call is pulling that up right now. And before I even get off that call,
Yeah.
I have that document in an email, right? That's perfect. And that's what I'm looking for. The more things slow down, the more things get off the rails. And so that's something we're trying to avoid. Now, I will say that you have to temper this,
Yeah.
particularly as a buyer, to
Hmm.
meet your seller where they are. In other words, if you try to run, what a bulge bracket private
Hmm.
equity firm would run for a $8 billion platform acquisition, if you try to run that process on a $15 million company, you're not going to get to a deal. The buyer's going to be overwhelmed and they're going to get tired of it. So it is a balance. You have to take, some of the learnings from up market and apply them where you can down market, but you also have to realize, be cognizant to the
Right. So
pool
you're
that you're
known for
actually
your
swimming in.
ability to guide clients through transformative exits. So do you have any recent examples of a transaction that really felt life changing for the seller? What made it special for the seller? Can you share any of your experience with our listeners?
Yeah, for sure. We're industry agnostic at Sierra Pacific Partners and sell companies across the United States. So earlier this year, we sold a SaaS software company that was essentially based in the cloud, right? But I think our seller was in the New Jersey and Maryland area, and young seller, early 40s. But he had been an entrepreneur. He's a sort of serial entrepreneur, not on a giant tech scale or anything like that. And he actually started by buying, a pizza business that he then sold. So he had been working across industries, and he had a really, really solid business that was driving really, really good margins. The net margins were fantastic. And he was actually
Hmm.
working about 4 hours a week on this business, which was part of the story, but it also made it hard for us to sell because essentially he was only willing to sell it if he could get a great price because he wasn't working on it that much. And through his responsiveness, he was very responsive
Hmm.
because he was only working 4 hours a week, and willingness to be a bit patient because he knew at the beginning of the process that we're going to have to find
Yeah.
the right buyer for him. Um, we were able to get him to a transaction that allowed him to fully retire, and now he's still active. He's too active to actually retire, but he's more engaged in things like investing in real estate development and things like that. And it's just been fantastic. He's been able to spend tons and tons of time with his kids post closing. Our buyer also is very, very happy. He's now, because he's got a
Hmm.
little bit more energy and excitement for the business, he's taking that
Right.
business to the next level and expanding it.
Great.
So it's
So,
really just been a great deal on both
who else is
sides.
in your team? Do you have other people involved with you who helps you to do deals?
Yeah, for sure. I mean, I think it is a team effort because again, time and urgency is so important that we don't want any
Hmm.
one person to be a bottleneck. If I'm working on something else, if I'm sick, I want somebody to be able to help cover and push things forward. So we have a fantastic director of operations who sort of manages quite a bit of the process. Like right now, we have a form, a survey form that we send out to sellers to help get as much information as we can on the business to help us prepare the marketing materials. And like right now, she's going through that form, pre-populating everything we already know about the business. So then we can send it to the seller, and he doesn't have to repeat himself by telling us things that we already know. So that's an example of what she does. She does a lot of our engagement letters. She does also functions sometimes as an analyst and does some of our buyer outreach. So she's very helpful with that. It, folks will be surprised if you get a list. We recently ran um, outreach for a health tech client to
Hmm.
about 200 buyers, and it takes time to develop that list, but it takes 10 to 15 minutes a buyer to actually do the reach out by the time you figure out who the right person at the company is, tee the email up and things like that. So it's great to have help. We also have a marketing coordinator who also acts as our receptionist. And then I think we've got two very, very active Main Street brokers who are starting to move up into the M&A space. And then we have three brokers that work part-time,
Right.
sort of when a deal catches their interest. So I think a
So,
team, I think
so
that
in
adds
your
up to about
marketing
seven.
plan, you put out these listings in public data like Best Buy Sell and other websites, or you just source your buyers directly yourself?
Yeah, that's a great point. So generally speaking, for the Main Street deals, we will put everything on Biz by Sell and the other similar databases. Upmarket, it really depends. Like particularly, we do a lot in the startup space where, Series A startups are trying to
Right.
sell to Series C plus startups. For a lot of those, the financials math does not pencil out. You need synergies to make the deals work. Like right now, um, we've got a client who just broke even profitability wise, but we're starting to get substantial seven figure
Yeah.
offers um, on him. Actually, 8 figure offers. And so
Which
that's just something
industry?
that you're not going to get
Which
traction
industry
on
they
Biz
in?
by Sell. Nobody's going to.
Health tech.
It's a health
Okay,
tech company.
great, great.
Um, But you're not like a PE buyer or an SBA finance buyer. They're going to say you're paying $30 million for something that just broke even, right? That's not going to pencil out. So that's not the best for a like listing marketplace. For those, we tend to really focus more on the outreach. That said, we do also list, we tend to put our upmarket deals on Axial
Okay.
and some of the more upmarket platforms just to see if we can draw some interest. So it's a combination of both, but for sure with the upmarket deals, very, very heavily reliant on buyer outreach. And also client preference. There are some clients that want us to start due to confidentiality and other concerns with a very, very small universe of buyers. And so for those, certainly, if we're iteratively reaching out to groups of 5 buyers, we're for sure probably not going to
Right.
post that
So
business on a
small
marketplace.
business M&A is really getting popular by funding the deal with SBA. So what do you think, for your perspective, what should buyers in the space considering before jumping in and funding the deal through SBA?
Yeah, for sure. I think number one, you know, I don't think buying a business is a get rich quick
Hmm.
scheme. You got to be willing to work, right? And I think particularly at the SBA level, if you have plans of, getting your first business, your platform, and then adding on to it, you have to be okay if due to economic performance or other reasons that doesn't work out and you end up just staying in that first business you acquire. Maybe not forever, but maybe your plan is by year 3, you'll have, 3 of them, or by year 5. If that doesn't work out, you have to be okay
Hmm.
owning that one roofing company or whatever it may be. So I think that's something, psychologically that's important to realize. I also think that, there's a lot of commentary on this. There's a lot of folks pitching the dream of buying businesses, including with no money down. I think the no money down thing's a farce unless
Right.
you have a relationship with the seller. If you're a preferred employee, if you're a family member, sure. But the only other way you're getting a deal with 100% seller financing is if the
Right.
seller cannot find
If the
another buyer.
business
And
is
so that
not
sort of speaks
profitable,
a
it's
little
a
bit about to
liability
what you're
for
getting.
seller. Yeah.
100%. I mean, if somebody says, "Hey, I'll give you $1 million cash financed by the SBA," and somebody else says, "Hey, I'll pay you via a 10-year note," I mean, it's not, again, unless it's a family member or your
Yeah.
general manager that you love. Um, there's not much of a reason to do that. I think, but once we get past sort of those aspects, I think definitely hiring an
Hmm.
outside financial due diligence firm super important to get that quality of earnings and make sure that that's tight and the numbers that you're expecting
Yeah.
actually materialize post closing. And then I think again, a pitch for the CPAs and other professionals that I think having someone as your attorney that does these types of deals is super important because they know what's normal. And again, they'll help facilitate that
Hmm.
process instead of slowing it down. And again, having a CPA that can help you to the degree certain analyses are needed on the tax front
But
can
this
be
money
super
down,
helpful.
no money down concept is getting more and more popular, and we see more and more buyers are inquiring about coming to our portal and platform, registering themselves with the same methodology. They're looking to buy a business. I'm not sure if they do deals, but I don't know if it works. But really, being a business owner, entrepreneur for so many years, I don't know if someone will sell their business, especially if you don't have any experience. Most of them, they come, they never been a business owner in all their life. Suddenly, they just see a YouTube video or get motivated, and they try to I don't know really if it works or not in real world. This is another topic too. Yeah.
Right. And I mean, there's different structuring dimensions to
Yeah.
this too on both sides, right? So like if assuming you probably are not are not buying a high performing business, right? Because otherwise, if the seller had options, you're not going to be his
Right.
preferred
Yeah.
buyer because you're no money down, right? So now it could be a solid business, but it's just too small to get SBA or other interest. In other words, let's say the business is kicking off 100 grand a year, right? Maybe at a 2X, it's a $200,000 business. If, in a state like California, you could get a lender to believe that you can, that may be a little bit too high, but you also have to get a lender to believe that that can support your life as an owner, right? So they may not, let's make it 50 grand. If it's kicking off 50 grand a year, you may have a lender in San
Hmm.
Francisco say you can't live on 50 grand in San Francisco. And so they won't lend on it. But I think as a buyer, even if it is no money down, how is it no money down? And what I mean by that is, are you signing a personal guarantee that if that business that you're buying that's likely not super successful because they're taking no money down, are they going to be able to come after you if you don't pay? Or are you taking it on a non-recourse note that basically says you only default under the note if the business makes enough money to pay the note and you don't pay? Those are two very different structures. But I think we got to look at it from, as you said, we may have people that don't know very much about operating a business, committing themselves to a personal guarantee for a business
Yeah,
that's
of
going to be
course.
very
And if
challenging to
they
run.
don't have any skin in the game, also the commitment, if they're going to be as committed as the existing owner is in the business, who have given years and years of sweat in the business. Yeah.
No, that's exactly, and that's the argument. 100%. And so if they have even if they have a personal guarantee, if they don't know what they're doing and they don't have any assets anyway, they may not think of that as a commitment. Whereas if you've got a personal guarantee and you're putting a substantial amount down, that's a very, very strong incentive for most people to get very educated very quickly about the business and the industry, as well as to do everything they
Right.
can to make
Okay.
it successful
So
post
I'm a
closing.
big advocate of AI, and I'm implementing AI in my business brokerage. I'm building a platform which is built on top of AI, and we're implementing AI in different sectors. So, what is your point of view on how AI will change our industry in coming years to come, and what are some of the use cases where you are utilizing the AI in your company?
Yeah, I think it's going to change everything from how we
Hmm.
do business on the sell side to how buyers analyze those businesses and everything in between. Um, like right now on the sell side, we're starting to see um, AI that can help us develop SIMs, those marketing materials, something that needs to be done that used to take weeks working with a graphics design firm that now maybe
Hmm.
you can have done in half a day, right? Again, in a situation where
Yeah.
at substantial cost savings, and so we're not only getting the cost savings, but the speed alone for these transactions, the speed differential is probably worth it. That's one example. I talked with a company, I think on Monday, that is coming up with an AI solution to developing buyer lists
Okay.
and outreach to buyers, which is just fantastic. We were talking like there's so many decision points. Like you come up with a list of 200 companies and then you use some tool like Zoom Info or Lusha or something like that to find the folks at these companies. And then if they're a size where they don't have a corporate development person and you want to reach out to the CEO or CFO, you look them up on LinkedIn. Oh, does that person come from an accounting background where they've mainly done accounting work, or did they used to work in investment banking where they love deals and would love the chance to get a deal in from them? That kind of decision
Hmm.
making goes into who you reach out to. And I think having a product that can do that would be fantastic. Because, like I said, reaching out to a 200 company list can take a week or 2 weeks of pretty much solid work at this point. So that's helpful. We're also starting to see the larger data room providers are rolling out AI diligence tools that can do contract review for change of control provisions. Some of them can even, you can use Chat GPT to analyze financial statements and things like that. And I don't think we're at a place where any of these are um, global solutions. Typically somebody will solve a part of the problem, which is helpful. It expedites things, and you still need some human overlay, but it can really, really make things more efficient.
Yeah.
And so I think it's going to be transformative. Particularly, I think we'll be at a totally different
Especially, I
place
think there's a
5 to 10 years.
lot of talk about, a lot of business owners are retiring, baby boomers are retiring in next decade or so, and I have a point of view on that. That many business brokers are also retiring at the same time. I think 80 to 90% of the business brokers and advisors are also at the same age as business owners. So who's going to sell all these businesses? So definitely, it's going to be a big transformation in the industry. And then, correct me if I'm wrong, and still there are companies in US, uh, they still take their listing on the paper, like they write literally on a paper, and still there are a lot of manual processes. The seller calls them in the local neighborhood, they go and meet the seller, then the buyer, and then a lot of time waste which can be avoided by automating and having online Zoom calls, meetings, and stuff. And many business brokers are not utilizing those technologies. Yeah, thereby, which can save a lot of time and money. And
No, exactly right. And I think as as a client of a business broker, both of those are equally important, because your broker's passing
mm,
along potentially less marketing costs. But I also think just the time alone is super important, because if we can cut down each step of the process by a couple weeks, all of a sudden we're getting
mm,
to a closing a couple months sooner, at the end of the day. And I think that's just super important. And that is, I think that's true. I don't have data on it, but business brokerage tends to be
mm,
a second career for a lot of folks. So that automatically skews you a little bit older. It also in the US tends to be for a lot of, I think the older brokers, sort of a part-time career. That if we get a couple deals this year and if we get one to closing, that'll pay for our vacation
mhm.
as a family or whatever. Um, and you make a great point. I actually hadn't thought about it before, that we're
Mm,
having a coalescence of a turnover in the profession at the same time as we have in the owners. And I think one of the things that's interesting there is for the brokers who do not adopt new
mhm.
technology practices, they may get along very, very well with their sellers who haven't adopted new technology practices, but they may struggle with the buyers who are
Yes,
used to a
that's
more
correct.
efficient
That's correct.
process.
So, Scott, selling a business is a very emotional event as a business owner. And it made me think you work with the sellers, mostly sell side, that right? So that's your first person, a client. So how do you manage that
Correct.
emotional aspect of the seller attachment with that business when you're navigating and negotiating a deal and finalizing pricing and everything? So how do you manage that aspect?
Yeah, I think, I think the most important
Mm-hmm.
thing is to be honest with your sellers. Now,
Mm-hmm.
you don't have to be harsh. There's a difference, but you have to be honest. We'll have sellers that are bragging about how they work 90 hours a week and everything in the business goes through them and they're a hero. And I do commend their hard work, but you have to say, hey, you got to picture yourself on the other side of the table hearing this as a buyer. You're saying, yeah, this is going to be miserable, essentially, right? And so I think we always want to be honest with our sellers about pricing, about deal structure, all that, because otherwise we get in a situation where we do a lot of work. Nothing comes out of it because expectations are misaligned, right? Our clients are upset with us, which we never want. And then three, I think you never ever want to give your sellers potentially false hopes, probably not the right term, but unrealistic expectations. I don't want a seller to go home and tell her husband, "Hey, I talked to this broker today. We're going to sell this business for $8 million." When my feeling is, yeah, there's a
Mm-hmm.
5% chance of that happening, right? And so I want to be really, really cognizant of that we set expectations
Mm-hmm.
correctly in working with sellers. And I think if you do that, that helps with the emotions
Right.
throughout the deal process, because they sort of know what to expect. And I think it's very, very important for sellers
Mm-hmm.
to keep a level head as much as possible. And I think that's why we're involved in the process, because we're a step removed and we
Yeah.
can be a little bit more objective and help them in achieving that objectivity. But everything's not an attack, on their business. You have to realize the buyer doesn't know what they don't know, right? So there's this
Mm-hmm.
huge information differential. The buyer may be signing a personal guarantee, his spouse may be complaining, "Hey, you're signing up for something that
Yeah.
may lose us our home," right? And so obviously
Mm-hmm.
buyers are going to be very risk adverse. So I think helping explain to them
Mm-hmm.
that that's where buyers are coming from, super important. And I think the last thing we see sometimes is, particularly if we drive good competition for a business and we have some options, is, absolutely, I want to push hard, but there comes a point when you're pushing so hard that the other side will back away because they'll view you as being unreasonable to work with. And so what I'm basically trying to say is you can't
Right.
optimize across all terms. Point blank, totally
Right.
one-sided deals, they
And
just don't get
you
done.
you guys work with the limited listings, right? You don't take all the businesses which you can't sell, right? Is that your how you work?
Yeah, correct. Generally, I'm trying to have, like, I don't know, 4 or 5 different engagements a year, something like that, so I can really focus on them and try to move them forward and do the outreach. And then my Main Street brokers will tend to have closer to maybe
Yeah.
eight, something like that, because they're a little bit more manageable, I think. But yeah, we try to limit what we take to deals that we really believe in, because that's how we get paid. We get paid, upon an exit. So we want it to be a deal that we really believe in and like, and we
Right.
think we can get a good
And
outcome for the seller.
you must have a high success rate in this business model. What, 100% businesses you sell, or you often get business that don't sell?
No, no, we're not at 100%. We definitely take on some interesting things. Like, I do some early stage work, and early stage work just depends on finding the right buyer. But I think we're definitely above, I actually don't haven't tracked it for this past year. But we're definitely above the median. I think the quote is
Hmm.
80% of businesses don't sell. Um, and the truth is we're honest with the sellers, and so we typically don't take those businesses on as clients, just because we don't want to do the sellers a disservice and give them those false expectations. But I would say generally we're somewhere
And
around a
you're
75% close
even
rate.
the typical business brokerage, they have less than 10%. I would say if a business brokerage is running at 10%, is a very well managed, well run business brokerage. Yeah. So even something about 50 is good.
No, absolutely. And again, I don't
Yeah.
want to. Yeah, and I don't want to knock the low closing percentage, because as long as those buyers have realistic expectations, it's great that brokers are trying to sell it. There may be a business that, there is that one buyer out there for, and for somebody to expend energy and try to market that business is a great thing. And obviously, if you do that with a distressed business, you're
Yeah,
going to end up with a lower
definitely.
closing rate.
And what would you say to the other professionals who are thinking of starting their own advisory firm within M&A? What's been key to your success at Sarah Pacific Partners?
I think we just have a passion for what we do. I think everybody that works here, we love learning. We love staying in touch with the industry, learning from folks like you, who I'm sure can teach me way more about AI. I'd love to hear about what you're doing. But I think just having a passion for it is the first thing, because the passion fires everything, right? Like, the passion fires your desire for knowledge, trying to get the best outcome for your seller, trying to develop
Yeah.
the best processes. And I do think that that's, if you don't come from an M&A or business brokerage background, learn as much as you can. I know here in California, we have the California Association of Business Brokers. There's the International Business Brokers Association. There's M&A Source. All of these organizations have great trainings that are very practical as well. They'll walk you through how you would actually, service a client. And I think
Right.
that's a
So
great way
yeah,
to get
so
started.
you asked me how we utilizing the AI. So I'll just give you an example before we finish our podcast. So I run the largest business brokerage in United Arab Emirates in Dubai, and our problem was we get about 1,000 plus leads every single month from buyers' interest from locally and all around the world. And out of these, I would say less than 20% are qualified leads, or we, in other word, in our industry, we call it motivated buyers. And 80% of them are, maybe either not motivated or, some of them scams and stuff. So what we did is, so we used to had a big team, advisory team. We used to, have discovery calls with each of these potential leads and qualify them. Now we automated the entire process with the conversational AI. So initially we did with WhatsApp and messaging AI, so which
Oh,
kind
excellent.
of the other person wouldn't know if they're chatting with a AI or they're chatting with a real person. The way we, build that functionality is really good with ChatGPT. We are able to qualify 50% of our total leads without a human intervention. And then now recently, since you can clone the
Wow.
human voices, so we successfully cloned the voice agents, AI agents. So we can actually call these buyers and sellers, collect the listing data. So instead of spending half an hour, 1 hour with the seller, so the AI agent can call the seller without seller knowing it. 90% of the seller, they don't know that they're talking to a real person or they're talking to a AI agent. They'll call, hey, how are you, Scott? You're selling a business. All right, fine. I need free information from you just to fill up your listing. You have 15 minutes. All right, fine. What's your revenue? What's this? Blah, blah, blah. So I need to fill up everything. So there are so many other use cases. So these are the two use cases we're using, which actually really change the whole ballgame. Yeah, similar thing. We have we're testing this same tech, outbound calling to the potential business owners and telling them, hey, are you looking to sell your business or valuation of your business and so on, which can build or your deal flow. So these are some of the use cases I'm using in my company, which are very helpful with AI.
No, that's fantastic. And the buyer
Yeah,
leads are absolutely tough, right? Because you you don't want to accidentally screen out someone who
yeah,
could
yeah,
become your ultimate buyer, right? At the same time, you don't want to waste your time and your staff, and you
yeah.
absolutely don't want to waste the seller's time, and definitely not share confidential information with someone who has no chance of getting to a closing. And so it's, you get, as soon as you post a listing, you get a flood because you've matched certain search criteria, et cetera, right? And having a way to sift through those in a way that's efficient. And also, again, keeping with my theme of speed, gets back to everyone quickly is super important. That's amazing. And it sounds like what we do via form for seller, which I thought was fancy for seller questionnaires, you're actually getting an AI driven
Yeah,
phone
yeah,
call, which is
completely
amazing.
same.
That's awesome.
Yeah,
And
go ahead.
well, as I say, what I like about a phone call too, and sometimes we'll supplement our call, our form via phone calls, but you give the
Yeah,
seller an opportunity to ramble, which is great because you get more information, and if it's somebody that doesn't like typing on my form, I may not get as much
exactly.
information as you do, which
Yeah,
is excellent
but not
for
many
you.
people actually want to speak with the AI agent if they find out that if it's an actually an AI. They just find it boring, and I don't know somehow. So that's why we would design our agent in a way, either if it's a chat agent or a voice agent, that is really hard to tell if it's a real person or it's an AI calling. They're really smart, and I think in the future, 3 4 years in the line, what AI is going to do is really. I mean, if I think of it's going to be so disruptive, and obviously it's so scary to even imagine the use cases of AI in coming years. People will deploy to do so many good and bad things. Yeah, yeah.
It's going to
Thank
be
you,
amazing. I'm
Scott.
excited.
Finally, if someone wants to get in touch with you from any of our listeners looking for an exit within your scope, how can they get in touch with you?
Yeah, and I apologize. It's a long name. We're Sierra Pacific Partners. You can go to sierrapacificpartners.com. I'm Scott at sierrapacificpartners.com. And our phone number is 916-234-3667,
Thank you.
country
Signing
code
off
1.
till the next episode. Thank you. Thank you. Thank you, Scott. That
Thanks,
was
Tahir.
fantastic. Nice talking to you.